So let's talk about what's working now. When I think about what's working, what matters to me is whether there is a large move to the upside at some time during the day. So if we look at NVNI, we can see that there was this, really good move there, went from $5 to 12. And if we look at OPTX, there was this move here just after 10:30 or so. And then we can look at moves that were in the pre-market. MYSZ, big move there. HSDT had a move there from 56 to $1.80, $1.79. PBM, this one was started yesterday and then had some. So here's the move yesterday, and then this morning, more of a move. I could go on. There's quite a few stocks that have done good things. And you would think when you look at here's another one, TAOP, nice move there from 30 cents to $1. That's a 300% move. So even though the market has been moving down for a month, and here you can see that, and most stocks have really not done well, there is this group of stocks that are quite exciting. And there's some of those stocks every day. Now, what are the common characteristics of those stocks? Well, we can see these symbols all over here: MYSZ, NVNI, HSDT, TAOP, PBM, OPTX. Here's Edible. I didn't talk about that one, but it made a really nice move from 12 till 1. Not even 12 till 12:40. So the common theme amongst all the stocks that you wish you bought, probably wish you sold, bought and sold, in and out, is that they're all low float stocks. The other common theme is that they're all quite liquid. You can see the number of trades here is quite high. You can see the float are, all actually very low, under 20 million shares. So that tells you something. That's what's working now. So then it becomes a question of when is the time to trade those stocks? And that goes back to the old idea that we keep talking about, which is sideways trading, surprise, that's a time to buy, or pull back and break. That's a time to buy. And if you miss those, then you got to wait for it to go into a new foundation and then break, new surprise, pull back, break. Now, what I think some of you guys are doing is maybe playing this. You're not trading the first break or the first pullback, but you're trading the second or the third pullback. And one of the problems that I'm seeing in this market is that there's either great opportunities in the pre-market, great opportunities in the aftermarket, pretty good opportunities later in the day after 10, 11 o'clock Eastern, but not a lot of great setups in the opening half an hour, even the opening hour. So from 9:30 till 10, when I'm on here talking, there's actually not a lot of great opportunities because the stocks that are abnormal were abnormal in the pre-market. They're already on their second or third wave. They're not starting up. And so they need time to settle down. And then it's the stocks that come alive later in the morning that are then the new surprises. So what are the stocks that came alive later? Well, there was OPTX. You can see when we were on, not a lot was going on. It was moving up a little bit, but not a lot going on. NVNI obviously was very hot yesterday and in the aftermarket yesterday. But for most of this morning, it was below the open. Actually, the open was here. And then it just broke from a rising bottom, sideways trading, got back above the open, and that started this move from 7 to 12. There was one more that came alive later in the day. I'm just trying to remember what it was. Oh, edible. EDBL, right? When we were on talking, nothing. Boring sideways trading. And then it came alive right here. And then it made a break of its first pullback right there. And it goes pretty good from that. So that's what's working. You have to catch the surprise or the first pullback, or if it's been abnormal, then you got to wait for it to build a strong foundation like NVNI did and then break again. So how do you find those? This is going to show up in the day trader first. And by the time it's here, it should be showing up in the low float, abnormal gainers list, and maybe even the H&R and early riser list. So it'll start showing up here. It usually shows up here as well. And then it'll start showing up over here and here. It should hit all of those screens, but at different times. So let's look at edible as an example. So edible right here, it triggered a 2-minute action candle at 11:50. So if we go and let's look at it over here on the swing list, it should be around that same time. Edible 11:53. So after 11:50, you know that that stock is perking up. We go back to the chart, blow this up, take it back. Gotta put more days of data in here. Take it back to how it looked then, because it's deceptive to look at it after the fact. You got to look at it as it appeared. Okay, so that's what you're looking at when it comes alive. And when you see it with this scale, you think there's no way that it can go anymore. It's very easy to think that. If you change your scale, if I take this little icon right here, which is the scale icon, do that in blue, this one right here, it allows me to stretch this scale. And so I can do like this. And now it looks pretty good. Now it looks like what I'm always drawing, right? Because the scale is better. And I can see the abnormal volume coming in. I can see 150 trades, 300 trades on the 1-minute bars. I can see boring and then suddenly coming alive. And so even though it feels, again, if we put the scale back to how it was, actually I'll just go like this. If we put the scale back to how it was, that may look like it's just up too much because the scale is not squished, but you just buy it and you say this is support and this is the stop, and you set your risk based on that, and you sort of close your eyes and take the trade because it has all the things that we want. Boring, sideways trading, comes alive, abnormal price move with very abnormal volume, and it's a low float stock. Wonderful. And then if you miss that, which is very easy to miss, sorry, I twirled my mouse and it has to catch up. There we go. So if you miss this, and again, it's easy to miss that, you can either try to jump in on a 10-second as it's moving up, and it maybe gave a signal there, or you wait for the early riser. And let's just stretch this out a little bit. Whoops. So there's your early riser break. And again, you put in your buy there. There's support. That defines your position size, 6 cents a share in risk. Buy 1,000 shares at $60 of risk. Buy 10,000 shares, it's $600 of risk. There's where your stop is going to be around 17 cents. And you know that there's a 30 to 40% chance it's not going to work, and you're going to get stopped out for a loss. And if you have a $100 risk tolerance, then you're actually really risking 150 because we size it off of this line, and you just let it ride. And then it runs, and now you look for exits. There's a bursting bubble signal right there. 45 cents. Hasn't broken the upward trend line yet, but that's a pretty strong signal. Look at the very strong volume as it's hitting a new high and reversing. So that's the first exit point. And then we'll probably see the upward trend line broken right there. Get out. If you're not out already. Then sometimes it'll make a falling top. Okay, now we're getting a falling top. Support is here now from a falling top. If it breaks down through that floor, it's probably done for a while. And there you go, broke down through the floor from a falling top. First broke this upward trend line, then broke this one from a falling top, and then broke this floor. All the signals there to get out of the trade. All right, hopefully that was useful. That's what's working now and what I encourage everyone to do.